Okay, here we go. Tether had a crazy week. Earlier this week, the S&P downgraded Tether stablecoin ranking to the lowest possible ranking of a week. At the same time, they became the largest independent holder of gold in the world, only surpassed by central banks. And once again, they're on track to become one of the most profitable companies in the world in 2025, if not the most profitable company in the world. So we're going to get into all that and why the US needs them to survive. So S&P cuts Tether stablecoin rating to weak on disclosure gaps. That was earlier this week. Now, the gaps that everyone's freaking out about online and on Twitter is this. So Tether has $174 billion worth of liabilities. And what those liabilities mainly consist of are the USDT, so the digital dollars that everyone owns in the world. So everyone that bought USDT, bought these digital dollars, there's about 174 billion of them in the world. And Tether only has cash equivalents of 140 billion. So if everyone in the world came together tomorrow and said, hey, we're all going to sell our USDT, our digital dollars, for real dollars tomorrow, Tether wouldn't be able to pay out everyone's money because they only have $140 billion worth of cash equivalent. Although this tweet saying this missing gap is backed by about $10 billion in Bitcoin, $12.9 billion from gold and precious metals. And he goes on to say, so yes, Tether is solvent on paper. They have $181 billion in assets and just $174 billion in liabilities. So I don't hold Tether myself, so I don't have a huge opinion on exactly what I think the reserve should look like, but I think all the FUD and people saying that Tether is a fraud has blown a little bit out of proportion this week, because at the same time, Tether bought more gold last quarter than every other central bank in the world, more than Turkey, Brazil, Iraq, and a whole bunch of central banks. And that purchase has made Tether the largest independent gold holder globally, surpassed only by central banks. So that's insane. This small private company, not small, small employees wise, is now the largest independent gold holder in the world, only surpassed by central banks. So this business model is obviously working, and we're going to get into that shortly. This is a list of the top 15 public companies that hold Bitcoin. Tether is not on the list because they are a private company, but they hold 87,000 Bitcoin. So if Tether was a public company, their Bitcoin reserve would be the second largest Bitcoin reserve in the world, only surpassed by Strategy and Michael Saylor, which is nuts. So their reserve is massive. This company is a powerhouse. So the CEO, wanted to comment on the S&P downgrade. This was a quote from their Q3 report. Tether will continue to maintain a multi-million-dollar excess reserve. He's saying Tether Group total assets, including their parent company, they have $215 billion of assets and $184 billion of liabilities. He's saying S&P made the same mistake of not considering additional group equity north of $500 million in monthly base profits. $500 million in monthly base profits generated by U.S. Treasury yields alone. Some influencers are either bad at math or have the incentive to push our competitors. Now, how is this even possible? How are they buying all this gold and Bitcoin? Why are they so profitable? So this is the magic money-making formula. They're literally printing dollars. That's how they're making money. So this is how it works. People buy USDT, which are digital dollars, and the demand for these digital dollars is so big because pretty much everyone outside of the United States, their currency doesn't store value as well as the US dollar. They have higher inflation rates and their currency does a bad job at storing their purchasing power. So everyone that's not in the United States, or especially not in like North America, would rather hold the US dollar rather than their own because it's a stronger currency. And also these digital dollars, you don't need a bank account. They can move fast on the internet and you can sell them instantly 24/7, 365. So people buy USDT. If I had 10 American dollars and I wanted to buy $10 worth of USDT, Tether then would take my $10 and they say they buy dollar instruments. A lot of the time it's usually T-bills, so US treasuries, to keep that peg 1-to-1. So to keep the USDT worth $1, they're saying that they're backing their USDT with dollars or dollar instruments like treasuries. Those treasuries then earn interest, and that interest is profit. So that profit then buys their investments in Bitcoin and gold. So that's kind of the magic money making formula. They're literally printing digital dollars. They're then buying, dollar instruments like US debt and US treasuries. And the yield that they get off those US treasuries is their profit. But there's so much demand for the digital dollars that they're buying so many US treasuries that the yield is actually massive, even if it's just 2, 3, 4, 5, 6%. It's still massive. And that's why they're so profitable. So yeah, last year they did $13 billion in profit. This is a private company with like 100 employees. And this year in 2025, this was from a couple weeks ago, Tether reports $10 billion in profit in 2025 so far. So it looks like they're on track to be even more profitable this year. We'll see how that ends up after the Q4 numbers come out. And this was a tweet I put together at the beginning of the year. I was just saying, assuming 100 employees, again, they're a private company, so we don't know exactly how many employees they have, but it's somewhere between 100 and 200 employees. Each employee is responsible for $137 million in revenue. So if this isn't the most profitable company in the world per employee, I don't know what is. And then this, I guess, is the most important chart. A lot of people, and this is the most important chart that explains the whole stablecoin story. Stablecoins are already the 18th largest external holder of treasuries. So they hold more US treasuries than the UAE, South Korea, and Saudi Arabia. They're just behind and now catching Norway and Brazil. And this is a big deal because the whole American financial market in US dollar requires on having a healthy treasury market, and they need buyers for their US treasuries and debt. So if these stable coins become big buyers of US debt like they are, the US is incentivized to embrace this because they need people buying their debt. And this is an even crazier chart. So this is the last 12 months. This was from June 2024 to June 2025. In the last 12 months, stablecoin companies bought $41 billion worth of US debt, more than Switzerland, Germany, or Taiwan. And again, because every digital dollar must be backed to one-to-one with safe liquid assets, so most of the time US treasuries, stablecoin adoption becomes a built-in treasury demand engine, which it is. And then this was a cool chart from Nick Carter just showing as demand for US debt and US treasuries declines across the world because, nations like China and some of the BRICS nations are realizing that the US has a debt problem and they're printing money to pay for their debt, inflating the value of the dollars away. They're realizing, why are we holding US treasuries as a reserve? Let's hold gold or something else. Now stablecoins are coming to replace that demand. And again, the whole financial system in the US relies on having a healthy dollar and a strong treasury market. So if the stablecoins are reinforcing and helping prop the treasury market up, the US government is going to like this, which they are. And to no surprise, really, the Genius Act is embracing stablecoins, and they want these stable companies to continue because they need buyers for their debt. So this was from Jordy Visser. He put together this piece on Substack, and this just goes over what the Genius Act is and why the U.S. administration is doing it. So I'll just read the main points. The Genius Act requires U.S.-issued stablecoins to be backed by dollar assets, primarily treasury bills. That means every stablecoin transaction, even tokenized dollars moving around the globe, creates demand for U.S. debt. What can the United States do to maintain its position as the global reserve currency? That's where stablecoins come in. Let's make dollars have higher utility by allowing them to compete as free circulating digital currency on the internet. China tried a central bank digital currency. It flopped because people wanted more. People wanted the most innovative product. Alipay and WeChat Pay just have more utility. Private sector innovation beats government mandate. While China doubled down on centralized control, America made the opposite bet. Open source capitalism let Circle, PayPal, and other companies like stablecoin companies build the best dollar rails and export them globally. The result, the US becomes the crypto capital of the world and reinforces dollar dominance. And what dollar dominance is just more demand and more people are transacting in dollars globally. And that is what stablecoins are allowing. So now we're going from this centralized regional banking system to this global banking system. I don't know if it's truly decentralized. That's arguable. It's probably not. But we're definitely going from regional banking to global banking. And the US administration and the Genius Act said, okay, we're going to allow this to happen because we want the buyers for our debt and we want dollar dominance to expand. But we still want some control over the companies because we don't like having no control over the US dollars and what people are doing with our money. So they said, okay, you guys can operate in America, but only under our rules and regulations. And what Tether said was like, okay, we're not going to operate. USDT is not going to operate in the United States. We're going to operate how we want to operate, do whatever we want to do with our reserves, and serve the rest of the world. But we're going to open a new stablecoin called USAT that will operate under the American rules and regulations. And there's other stable companies that operate under those regulations as well. Circle, there's one of them. And then this was interesting. Bo Hines was in the Trump administration doing something in the digital asset space for Trump, whatever that means. He left the Trump administration to join Tether and lead USAT, so lead the American stablecoin that we were talking about here, USAT. He left the public sector to join the private sector because I'm sure when he was in the Trump administration, he saw the demand for stablecoins and how he thinks these companies are going to grow. So he had said, screw it, I'm out. I want to profit from some of this. I am going to join Tether, and now he's the CEO of the American stablecoin USAT, so the tethered American stablecoin. And now kind of this brings me back to, how long is this going to last? The dollar milkshake theory. Saifedean gave a really good presentation at the Bitcoin conference in Las Vegas this year. I recommend checking that out. And what he was saying was he thinks that stablecoin companies like Tether that have massive reserves in gold and Bitcoin, as the US dollar continues to inflate away, their Bitcoin and gold might be worth more than their dollar reserves itself. So they might actually be able to become an attractive place for people to store capital because they can offer interest because they have such strong reserves in Bitcoin and gold. They can offer interest to people that hold USDT, or they can just upward peg and increase the value of everybody's stablecoins. So instead of every stablecoin being worth $1, now it's redeemable for $1.20 because the reserves are so strong and the US dollar has continued to weaken. So his conclusion was Tether acts as a temporary patch for the dollar, but ultimately functions as a massive automated off-ramp from fiat into Bitcoin, which I agree with. I think this is all bullish for Bitcoin, getting people into the digital world. And I was recently in El Salvador at the Bitcoin Historical Conference where Eric Yates gave a similar presentation. And he was saying how stablecoins will be competing for dominance and they will be offering interest. And the companies offering the best interest will be the ones with the strongest reserves holding Bitcoin. And then people will realize, why am I holding dollars when I can just be holding Bitcoin? So he kind of sees it as this Trojan horse play that I'll get to in a minute. This is what Jeff Booth says all the time. Stablecoins are guaranteed loss coins. So just because USD is the best and strongest fiat currency in the world, it's still losing purchasing power year after year after year. So even though they are the strongest fiat currency, people are eventually going to realize that they can hold an even better currency, Bitcoin, and store their purchasing power in something that can't be debased, eroded, and melted away. And that's kind of this whole stablecoin is the Bitcoin Trojan horse narrative, where stablecoins are really reinforcing Bitcoin. So these are kind of the 3 points I put together. I think stablecoins are training the world. Stablecoins force people to get comfortable with digital wallets and private keys, and it gets integrated into the financial system. And we're seeing that now with payment processors like Stripe and Square. I think it's going to be the money for AI. AI isn't going to go open a Canadian bank account and then wire money to the US, wait for a week, and then pay $50 worth of fees. They require quick borderless money. And I think at least in the short and medium term, they're going to be using stablecoins to transact between each other. And I think it's a one-way street. When people realize how much quicker and better it is to transact in the digital economy, they're going to stay there. We can already see this with how fast the stablecoin growing and how the demand is exploding. And I think at some point, people are going to realize with some of their capital, at least, why don't I just hold the better asset, Bitcoin, instead of a dollar-backed instrument that's constantly losing value? Okay, that's what I wanted to go over today. That's the Tether story. See ya.